And hello there, good evening, and welcome to another episode of Business Focus here on TV3 with me, Michael Obudu. Coming up tonight on the show, Finance Minister to unveil Ghana's half-year 2025 fiscal health and outlook on July 24 with focus on economic recovery, debt and IMF program. Ahead of the presentation, we ask, can the gains made be sustained in the medium to long term for economic development? We have a tall list of guests for you on this particular subject, picking their thoughts and reactions to the media budget presentation, which is happening on the 24th of July, just about 48 hours to go. But before we delve into our topic for today, we'll turn our attention now to the currency and commodities market as well as the Treasury bill market. Well, now, on the commodities front, the price of cocoa is up by $236. It's trading at $8,036 per ton. Gold is also up by over $45, trading at $3,395 per ounce. Crude oil, however, is down just marginally, selling at $68.81 per barrel. Updates now. We'll turn our attention to the currency market quickly and tell you how the local currency is performing against other major trading currencies. Well, the dollar will be bought from you at 10 cedis 44 pesos, sold to you at 10 cedis 45. The pound at 14 cedis 10 pesos, sold to you at 14 cedis 11 pesos. The euro 12 cedis 23 pesos, sold to you at 12 cedis 24 pesos. But they guided that these figures will be much higher at a forex bureau near you. Markets now, and turn our attention to the T-bills market, where the 91-day bill is currently selling at 13.72%, 182-day bill selling at 14.6%, and the 364-day bill selling at 14.7%. And these are the figures coming in quite higher than inflation. The reverse has been the case over the last couple of months, as government has consistently cut the rates, but we'll see how all of that translates in the next couple of weeks. But then every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would want to remember. That's *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime, and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. So dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank, proud sponsors of Business Focus as well as Telesa. We'll go for a quick break. When we come back, we'll delve into our topic for today. Stay tuned. Welcome back to Business Focus here on TV3 with me, Michael Obodu. Now, Finance Minister Dr. Kasiala Forcing is set to present the 2025 Media Budget Review to Parliament on Thursday, July 24, a crucial event mandated by Ghana's Public Financial Management Act. This constitutional and legal requirement to provide a comprehensive update on the nation's fiscal performance for the first half of the year and outline the economic outlook for the remainder of 2025. With growing signs of economic recovery gaining momentum, key attention will be focused on several critical areas. Observers will be keen to hear updates on the government's revenue performance, particularly as it seeks to consolidate fiscal stability and fund key infrastructure projects. Strategies for managing Ghana's debt servicing will also be a major point of interest as the nation continues its effort to restore long-term debt sustainability. Crucially, the review is expected to provide insights into the progress of Ghana's ongoing program with the International Monetary Fund, IMF. Well, joining us for the conversation this evening on Business Focus is Joseph Paddy, Director of Communications for the Ghana Union of Traders Associations, GUTA. Prof. Quartey, also economist and Director of the Institute of Statistical, Social and Economic Research, ISE. Later, also we'll have joining as the President of the Hoteliers Association, Dr. Edward Aka Nyameke, and a host of other sound bites will be bringing you from various sectors, from the agriculture, energy, services, and the likes on their key expectations of the media budget review. Also, we're on the streets to speak to the public on what they also expect to see. But in studio now, I have Joseph Paddy, the Director of Communications for GUTA. Joseph, thank you so much for joining us.
Thank you. Let me say good evening to your viewers and your listeners.
Thank you. Always a pleasure to have you. So first off, I'll ask and say, what's your assessment of the first, I think, 7 months of this government? Yes. So far, how far?
So far, so good. We've seen some stability when it comes to cost of doing business in terms of the dollar-CD relationship and the other foreign exchange. So we've seen some stability, and that we are enjoying for now. So we're hoping and looking forward for a better days to come. And what is government doing to sustain this stability? These are some of the things we look, so that there will not be speculation in the system. There will not be a panic reaction. People are still skeptical and say, for how long can we sustain this? So we want to hear something from the minister as he comes on board to let us know what the measures they put in place to sustain whatever gains we have gained as a result of appreciation of the CD against the dollar. These are some of the things we're looking at. And we're also looking for the alignment of our tax regime. What is government going to do to align? Because our tax regime is not aligned. Some are paying 3%, some are paying 22%, some are paying 5%, some are paying... So it's not aligned. So what is the minister going to do to make sure we have an alignment in our tax regime? These are some of the worrying situations. That is why the minister always complains about compliance. The reason why we've not seen the compliance as high as we were looking for it for, as a result of when our tax regime is not aligned. So we want to hear something from the minister in the area of our tax regime alignment. That will help business community to comply to tax policies and tax programs. So these are some of the few things we want to hear from the minister. Yes, but so far, the business community, like I said, we're happy with what is going on. And then we want to make sure we see the sustainability of whatever we're doing. And then we've also seen that inflation has also dropped. Inflation has dropped. Today it's about 13.7 inflation. So, but we don't see the effect, the impact on our interest rates when we go to the commercial bank to go and borrow. We are still borrowing at the rate of 35 to 40%.
Well, the policy rate is still where it is relatively.
The policy rate is still 29. As at March 28 or so, it was still 29. So that is why, so we are saying that if we're going to use the policy rate to curb inflation, and now that inflation has dropped, we want to see the impact on the policy rate dropping so that it can have impact on the commercial bank interest rate. But we've not seen that yet, so we want to find out why. The minister is supposed to come around and tell us why we still have higher interest rate. If we do that, see, the 24-hour economy, purpose-driven, where they're looking for production and manufacturing concern in terms of export, that purpose will be defeated. Because no businessman can go to the open market to go and borrow, to the commercial banks to go and borrow at the rate of 30 to 35% and survive in business. And even so that even commercial, how do you call it, a production or manufacturing will be attractive. As it stands now, no businessman will do that. So what is government going to do to give us cheaper credit in terms of going to production and for the purpose for export, for forex, So these are some, because at its position now, interest rate is extremely high for the business community, as I'm talking to you. So no businessman will want to go into production at the rate, because just imagine you are not competitive in the world market, because your competitors are borrowing at the rate of 3% and 4% and 5%. And meanwhile, we know, just for example, let me use a typical product like a copper. We all know the price of copper worldwide is the same price.
Yeah.
Yes. So if somebody wants to go and import copper to produce cables, and then he goes to buy maybe at $3, the world market, I'm just using $3 as an example.
Yeah.
But he's going to the bank to go and borrow at a rate of 30%. But his competitor out there is borrowing at 3%. Obviously, yours will be extremely higher than that, which is, so you are not competitive. That is why we go out there to go and buy, pay all the duties, and still it's cheaper than that which is produced here. As a result of some of these reasons, where he's going to buy, go to the commercial at a higher rate, 35%. Obviously, his price will be higher. So these are some of the areas we're looking forward to see what government is going to do to make sure that the business committee gets some respite and get some cheaper credit to trade and do business. Yes.
So from what you've said so far so good. However, you want to know government's plan to sustain the gains that have been made in the economy so
exactly
far.
So.
You also want the issues with taxes resolved and sort of streamline the whole tax system in the country. You also want the issue of the policy rate to be addressed in order to reflect the current inflation trends in the country. But you have said that...
And also, government should also try and rationalize the charges at the port.
Charges at the port.
Oh, yeah, it's very, very important, the charges at the port. That is why, because cumulatively, we are paying about almost 55%.
Okay.
So just imagine you import a goods worth about 100,000, you are looking forward to pay a duty rate of about 55%. So you need to get about $55,000 to just pay for a duty. So we want to also see the rationalization of the charges at the port. That is why we are losing business to some of our neighboring countries, because the complaint is that our charges at the port is extremely high. So even the inland countries that used to patronize our port no longer patronize. I'm talking about Niger, Burkina Faso, and all those things. And they started patronizing our brothers at the West Africa countries, like Togo and everything. So these are some of the things we're looking forward, how they can rationalize our port charges too is also critical to the business community.
Papa, this is, the consumer also argue that before even you start the conversation about wanting policy rate cuts, already you've benefited from port charges dropping significantly. Some of you who were paying duties as high as 60,000 cedis or $60,000, I've seen it drop. Okay, in CD terms, I've seen it drop from about 60,000 to about 40,000.
Yes.
And yet it hasn't translated to the pocket of the average Ghanaian. So if that one that you have even gotten significant win for, you told us to give you 3 months.
It has.
For you to begin to drop prices, and you want rates.
No, it has.
Cuts
it has. That is why you see stability.
Lending.
That's why you see stability of price of goods and services in the market
now. But you've gone
now.
Beyond stability at this point.
Price
now
has
the
been stable.
conversation is about price dropping.
The price has been stable, one, and price has dropped. Like I said the last time, a bale of boxer shorts that they used to buy it 4,800 now goes for about 3,200. Drops drastically, significantly. But most time, people do that and compare to food inflation, where we know some of the food that we'll be talking about, they are seasonal products. For example, let's talk about yam. When the season of yam goes, obviously the price will go up, because we don't have all year round production of yam. We don't have all year round production of plantain. So those food inflation, that is why you say, oh, I still went to the market and I'm buying 1 tube of yam for 50 cedis. So price has not reduced, dropped, because the season is gone. But when the season comes, you can buy 3 for about 20 cedis. So let's know the comparison, and how we compare those things to those with the forex fine, but the local ones that we see price now dropping as a result of it. We don't have all year round production of those items. So what can we do to help farmers to get irrigation so that we can have all year round production of some of these food products? So these are some of the things we'll be looking forward to.
It's interesting how you are shifting the goalpost today. But then you told us that we should give you 3 months.
Which of what
the
we
3
have.
months is elapsing somewhere at the end of this month, more or less. So if we hold you by your words, by August, we should see significant drop in prices on the markets.
Yeah, which we have.
No, not the one you've done already. You said we should give you to August to see significant drop in market prices, because you needed time to offload your old goods or your old stock.
Yes.
So August is the deadline. 3 months is over. Can we still hold you by your words that we should expect drastic cuts in prices on the markets?
Obviously. So long as we have stable forex, where we now is about 10 2.2, 2.2. But unfortunate thing is that when we go to the commercial bank, we don't get them at that rate. We still have to go to the wayside and then get it at a 12%. So these are some of the things. But sincerely speaking, we've seen some drastic change in price of goods and services downwards. And we're going to see further as a result of this stability. You know, Ghanaians are like, let's watch and see, syndrome. But I believe that for now, government is doing something right, so we need to support that. To also make sure the consuming public has some respite and some relief. And that's what is the point where you go and bring the goods and nobody's buying? Because we do that looking at the purchasing power of the consumer. So we look into your pocket before we go out there. And so what is the point we bring something that you can't afford? So as much as we want to maximize profit, we also want to show some concern to the consuming public. What can we do to also help them, support them? Because their salary is nothing to write home about. So we should be able to measure so that we all have a win-win situation. As much as I want to stay in business, I want to also support the business, the consuming public, yes. Okay.
You spoke about food inflation earlier. So we had actually also spoken to the executive director of the Peasant Farmers Association, and he had some expectations to share. We'll listen to him and then come back to you. So earlier we spoke to Bismarck Usunote. He is the executive director of the Peasant Farmers Association. This is what he had to say on his expectation for the mid-year budget review.
First of all, we have to look at the main budget that was passed, which I think we had some concerns around it. The first being that the allocation to the sector was quite very low. Per our analysis, the agri sector had less than 1% of the total government expenditure, and that's quite worrying. For a country that we have a lot of ambitious programs, like the Feed Ghana program, like the 24-hour economy program, which hinges on agricultural development, and we felt that amount was quite inadequate. So we are hoping that with this mid-year budget, the government should make amends and try and push more resources to the sector. At least we expect that if the government is making a case for an increase in expenditure, at least 10% of it should go to the agricultural sector, based on the projection that we have for the sector. That's the first one. The second, we know the rollout of the Feed Ghana has started. The peasant farmers have taken delivery of some inputs from the ministry, which we are very grateful. We actually think that we could have gotten more if they had enough allocation. We also have witnessed some drop in prices of inputs like seed and fertilizer, around 10 to 15%. But I still think that the price can still go a bit lower. And we believe that what is holding up the prices is the taxes on them. If you remember, during as part of the 120-day social contract, the government promised that they were going to review the Tax Exemptions Act to take off taxes on agricultural input and equipment. That was not done in the main budget. So we are hoping that with this mid-year budget, the government should quickly begin legislation to review the Exemptions Act and ensure that whatever agricultural imports we are having, that's the input and equipment, we don't have taxes on them. So that this will further drive the price of inputs down. Our third issue that we are looking at is that we are currently approaching the harvesting season, but for now we've not seen any major plans for the marketing of our produce in terms of mopping up the produce. When there's a bumper harvest, what's the plan in place? We've not seen a lot of that. We know the National Buffer Stock mentioned that they need at least 700 million. So once there's expectation of enough harvest, we want to see some allocation go into mopping up of inputs. So we don't mopping up of produce, so that we don't have instances where we are recording high post-harvest losses. And then lastly, we know that one of the key drives for the Feed Ghana program is the forming of clusters or the cooperatives that the minister wants us to do. However, there's a major challenge with the Department of Cooperative. They are very much ill-resourced. They don't have a lot of capacity. They don't have logistics to move. And I think that for the government Feed Ghana program to work, and also the 24-hour economic program to work through the cooperative system, we need the cooperatives to be on their feet. So I also encourage that there should be some allocations to the departments to boost their work and make them be able to move according to their mandate. I think that once government is able to consider this into their budget, we should see some steady growth in agriculture.
So that was Bismarck Owusu-Nortey. He is the Executive Director of the Peasant Farmers Association, sharing their expectations from the media budget review. Key amongst them is the fact that they want an increased allocation for the agricultural sector. And they are saying that the expected increase in government expenditure for the rest of the year, 10% of that amount must be allocated to the agricultural sector, because according to them, the actual sum allocated for the sector in the 2025 budget was woefully inadequate. And they think that it's crucial that we fund the sector if we are serious about promoting agriculture in the country. They also speak about a plan by government to mop up excess produce to curb food post-harvest loss as well. Also joining us now on Zoom is Professor Peter Quartey, Executive Director of the Institute of Statistical, Social and Economic Research, and also economist. Prof, thank you so much for your time. Before you react to some of the things that have been submitted, what are your key expectations from an economic perspective?
Well, for me, one of the key things I would like to see is our revenue numbers. Because since the budget was read, we haven't heard much or seen much about how well we are doing with revenue mobilization. Some tax handles were scrapped, and there were concerns about how we were going to fill those gaps. So it will be very interesting for me to see how we've been able to either maintain or increase our revenue GDP figures in line with the IMF targets and expectations. In the budget, there were also some discussions about injecting efficiency in our tax collection system. To what extent is this yielding fruits? Are we seeing much of that happening? I believe the numbers will show whether we are really making inroads, or rather our revenue numbers are struggling. So I want to see more on the revenue front, as well as with expenditure, how well we're doing to contain government spending. Recently, we heard about fuel for government appointees being stopped, another revenue rationalization measures. So, a balance of the two, how much we are increasing revenue, and then to what extent are we reducing expenditure. But one area we want to also be sure is to look at the arrears, because if we show very good revenue expenditure numbers, yet there's a lot of arrears to contractors, arrears to suppliers, that was also a red flag. So I would like to see these areas critically. Then we can move on to look at the real sector. Agric, I heard the earlier speaker speak about our investment in Agric. I'm hoping that with a big push agenda, there'll be massive injection of capital into agriculture so we can stimulate agric production. So I would like to see how we are stimulating agriculture so we reduce inflation, food inflation especially, and then the issue about the manufacturing sector talks about reducing policy, reducing interest rate, the exchange rate appreciation that we are seeing. To what extent is it stimulating manufacturing or the industrial sector? I believe these are some of the critical things one would like to. So immediately, these are the areas I would like to focus on. Then we can look at other medium to long-term measures.
Okay, Prof, on the issue of revenue, the revenue side of things, at least we know first quarter 2025, the GRA exceeded its revenue target by about 5 billion. Beyond this also is the extra revenue we've seen coming through the gold board. Also from the Bank of Ghana perspective, we see an increase even from the import cover to about 4 months. Don't these show enough sign that things are looking good on the revenue side?
Well, if things were looking good, then one would ask, why do we impose the 1 cedi per litre on fuel? If the revenue numbers are so good, then one wouldn't expect this tax to be imposed. So perhaps it's good to look at the number. I mean, I must admit the revenue, the reserves, and all the revenue, the gold board, and all that. I think they are encouraging, but we want to see the true picture. We want to see the numbers. Then you can speak to the actual numbers as well. Yeah.
All right, now, Prof, on the expenditure side of things, we know contractors are expecting to be paid. You've heard the minority side in Parliament say government is not making key capital expenditures. The finance minister is really being tight with the fiscal, with his fiscal regime. But really, this is an economy that is trying to recover. How then does the government balance the two now in meeting critical expenditure while still trying to be able to protect the inflation and the likes? How do they balance this?
So exactly, you strike a delicate balance. As much as you don't want to spend, you also cannot hold people's monies and contractors, etc. money. When you do that, it has a knock-on effect on other sectors. So I believe government will strike a delicate balance. I'm happy to hear GRA meeting its first quarter target, and I hope they will continue to meet all the target and even do more, so that once the revenue numbers come in, it will be easier for government to also spend to cover contractors, other suppliers, and other areas as well.
Talking about spending, we've just been joined by the CEO of the Ghana Chamber of Construction Industry, Emmanuel Cherry, one group that has been on the neck of government to pay them arrears owed them. Cherry, I'm sure getting your debt cleared is top on your list.
Very, very important. We can't wait.
Okay. How much of this debt are you expecting to be cleared? And before you even go into that, we know that some monies were allocated to clear some of that debt, some about 300 million or so. How far with that?
Yeah, first of all, we need to put this issue in perspective. Because as we speak today, you and I know that the debt portfolio is over 21 billion, still counting as we speak. And with government's commitment, is trying to make 4 billion available for payment. And 4 billion out of 21 billion is a bit significant, but sincerely, based upon the portfolio we are looking at, is woefully inadequate. Because you and I know that contractors, they don't work in isolation. We work with other partners. We work with other stakeholders. We work with other, service providers, such as the financial sector. Most of the banks today, they are in challenge because the contractors are not being paid for them to also honor their obligations as expected. If you go to the service sector, the manufacturing sector, same there as well. So therefore, in fact, we are really causing a challenge to most of the economic sectors of the country as a result of government indebtedness. So if today government is to pay us 4 billion, it's going to cause a lot of confusion to us in a sense that now it has been made public. And coming from the president is just like a command. So therefore, a lot of people that we work with who are expecting payment from us will start counting the days. Possibly by next week, there may be some shouts on the table of us, the contractors, as a result of receiving such payment of 4 billion. But any contractor today, he will interview, will tell you that immediately that money drops into the account, it will be swallowed by the bank, which means that contractor will come back to zero. Now, government is expecting contractors to go back to site, work and complete our other projects. It's going to be a later challenge to us because we already defaulted as a high risk in the financial sector. So therefore, most financial sector players may not like to continue working with some of the contractors, which is going to be a challenge because they need to at least get liquid to go back to site and continue work. Because of default, some of them may be dragging their feet, may be reluctant of giving money to contractors. So these are some of the bottlenecks, even though the payment is going to be made, but since it's not going to be paid, the entire amount is not going to be paid, it's going to be a challenge. Which contractor is going to be paid, which one is going to be left? What percentage are these going to be these are some of the issues that we are discussing with the minister to see how we can find the common grounds to solve this problem so that after payments, the financial sector will have that confidence in us that it's no fault of ours. Our government is committed to continue. That if you raise certificates within a period of 2-3 weeks, you pay. If that confidence comes, I'm telling you, we are going to be better off than before.
Okay, so Cherry, you've said that government is promising to pay about 4 billion out of the 21 billion cedis that it owes you. Now, that 4 billion amounts to just under 19%, about 19% of the total debt. Realistically, in this media budget review, what percentage of the total debt are you expecting government to clear to at least give your members some respite?
Yeah, we were expecting at least 75% payment so that, because most of the wells we are talking about, they are flashy projects. A number of them are flashy projects. And this can only be complete or continue with a substantial amount of payment. So if this has been done, the financial sector will receive a boom because they'll keep seeing money from the contractors. The manufacturing sector, which is the production sector, is also going to see a boom because there's going to be continual, purchase of cement, continual purchase of, iron rods, continual purchase of roofing sheet, and continual purchase of, bituminous products and what have you. And the labor also is going to reduce unemployment within the space. So you and I know that construction alone contributes to over 14% to GDP. So if attention is focused in there, it will clear a lot of unemployment out of the system. So it is a welcoming news that the big push is also being pushed out there to absorb all some of these particular challenges within the sector and then the infrastructure gap to bridge it up. So in fact, there are better days ahead of us, but as we speak now, you and I know that we need to stay alive to continue with the future. So the low-hanging fruit is let the president try as much as possible to make budget provisions for at least 75% so that we spread the rest as we go on.
All right. So, Prof, you've heard Emmanuel Cherry, the CEO of the Chamber of Construction Industry. He wants 75% of their debts paid. They are owed in excess of 21 billion. That means that they want an average of about 15 billion cedis paid to them. Prof, really, which sector should government now prioritize with the limited money resources that they have?
You and I know that after paying for wages and salaries and then also servicing our debt, we are left with some statutory payments, NHIS, and we are left with virtually nothing. Sometimes we are even in arrears already. So financing some of these infrastructure projects comes from borrowing. And we also don't want to borrow, given what we went through with the DDEP. But in all, I think we need a delicate balance. The 4 billion out of the 21 is also not enough. But 75%, I think, is also an uphill task, something that will be difficult for government to cough out in a month or so. There is the need for some negotiation. Government can engage them and ensure that at least if they can have some payment plan that they are going to follow, so that by the end of the year or by first half of next year, they have cleared their arrears. That for me will be good. But I don't think government will be able to meet them with, pay the 15 billion that they are asking for. The priority, yes, road is very important. But the other priority areas are as well. Agriculture is key. Our food production, our food basket has to be revamped so that we stop depending on imported food items. So in as much as we want to have better roads, we also want to ensure that the real sector is also supported. We invest in the real sector as well.
Prof, I know you were against us returning quickly to the capital markets, but from the way things are looking, it looks like we may have to go back soon, especially when we've started receiving some upgrade in our ratings. Or do you still say we should tread cautiously? Because there are bills to be paid, critical ones at that.
Well, you see, in borrowing, there are different options for borrowing. And the borrowing is not the last resort. It's more or less the last resort. Internally, we haven't exhausted all our means of raising revenue. I don't think we've exhausted our means of taxation. We tend to tax the same old people, and that is not good. There are other things we are not doing right. Let's take the case of property rates, and I keep hammering on this all the time. I don't think we're looking at the kind of properties, the value of the properties we have in the country. I don't think we are tapping into that area. These are low-hanging fruits that we can tap into. There's the talk about making state-owned enterprises more efficient so they can declare dividend and also make government machinery function. This is something we need to work on. So let's work on some of the low-hanging fruits. Then when that is exhausted, we look at other cheaper sources of finance, not the capital market. We can look at bilateral loans, we can look at multilateral loans, the IMF, the World Bank, and other multilateral agencies, African Development Bank. These are cheaper sources of credit. When that is exhausted, then we can start thinking about the capital market. But even for the capital market, when we go there, we should be clear as to what we want. We should have a project that when we invest in, it will generate resources for us to pay, but not to go and borrow and consume, but borrow to invest in projects that have high marginal efficiency and will be able to repay the loans when they fall due.
At least to be fair, the president says that any capital investment that the country is going to make or loan that they would go for such investments must be ones that can pay for themselves. So we'll see if this government would stick to what it says. However, now on the issue of monetary policy committee and the policy rate, Guta here says they expect the rates to go down because inflation has dropped significantly. Is now the right time, or should we stick to where we are because we have a target of about 11% that we still have to hit?
Well, I think a marginal reduction, a gradual reduction, in my view, is acceptable in the sense that if you look at the inflation rate and you look at the policy rate, the gap is just too wide, and we need to drive down interest rate. Interest rates are so high for any business to be profitable. I think the indicators are good. So when they are good, certainly maybe a 1% or 2 percentage point, in other words, 100 to 200 basis points reduction would be good for now. That has ripple effects. When you reduce the policy rate, it's likely to lead to a reduction in the lending rate. Then businesses can borrow and be more active, productive, and by so doing, we're able to generate more resources, grow our economy. So I would say that given the high cost of doing business, already utility tariffs, etc., have gone up. And if the policy rate is pointing towards, the inflation rate and other indicators are stable, a marginal reduction in the policy rate is justified.
Okay. Paddy in studio was agreeing with you until you got to the marginal reduction. It seems he wants more, like Oliver Twist. But we'll go for a quick break. When we come back, every day people face different emergencies: police emergencies, fire emergency, medical emergencies, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would want to remember. That's *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank, and sponsors of Business Focus as well as Telesa. We'll go for a quick break. When we come back, we'll bring you more. Please stay with us. Welcome back. This is Business Focus here on TV3 with me, Michael Obodu. Continue our conversation, and still in studio is Joseph Paddy, the Director of Communications for the Ghana Union of Traders Associations, GUTA. You heard what Prof had to say about the policy rate. You didn't seem to agree too much with the margins he was projecting.
Exactly so. The 200 unit point is too low. It's on the lower. Looking at the inflation rate dropping as far as 13.7, and looking at where reference rate or policy rate stands at 29, and the interest will go between 35 to 40, I think is on the higher side. You see, and Prof, I think, as an economist, I know where he's coming from. They always look at the revenue aspect, revenue mobilization, which is a good thing. And he spoke a little quite on the how to expand the tax net, yes, for revenue mobilization. But what we're also looking for is that for government revenue to grow, you need to facilitate business. When business grow, your revenue grow. But when business doesn't grow, your revenue doesn't grow. So what are you doing to facilitate our trade in the area of policy? If you give us cheaper credit and we expand our business, you get more revenue. So these are some of the things we're looking for. Most time, they talk about revenue mobilization and they are quiet on trade facilitation or business facilitation. You know, government comes up with policy to facilitate trade. So what is government putting in place to facilitate our trade, for our businesses to grow? Then when we grow, your revenue will also grow. But as it stands, businesses are not growing. That is why you see government revenue also not growing. Because now you've milked the business committee so much so that now the business are bleeding. Now it's like a cow. You have a cow, you are milking, and then when the milk finishes, you are still milking. The only thing you see is blood. And that is what happens to the business community. The rates in this country, look at our rate, our tax rate, 22%. You understand? 22%, look at the tax rate. I spoke about duty rate, hopefully around 35%. Which business will grow under this dispensation? These are that's why we're saying they should rationalize our tax regime. So that there might be some parity in the tax, because some are paying 3%, some are paying 22%. So you see, these are the challenge. The tax rate is extremely high in this country.
This government says it will work towards it, and I'm sure that's part of the reason why the GRA has been engaging you extensively. But there's also another association that I'm sure would agree with some of the issues you've spoken about, especially with regards to tax, and that's the Ghana Hoteliers Association. Dr. Edward Akanyamike is the president of the association. Doc, thank you so much for your time. Tell us, for you as hoteliers in the country, in the services sector, what are your key expectations in this mid-year budget review?
Okay, thanks so much for the opportunity. And being a mid-year budget review, our reference point is what we expected from the main budget, and how those expectations were met, and what we would want to see in the mid-year review. Okay, so I have a few points here. For instance, we pushed for tax consolidation for the main budget. We said that it should be possible for the VAT, the NHIL, the GET fund, and of course the COVID levy to all be put together as one big tax for us at, say, 10% for the hotel industry. Recently, the Ministry of Finance and the Ghana Revenue Authority invited us for a meeting to consider a proposal from the World Bank on the tax reforms as it was promised in the budget. And indeed, a lot of the issues that we raised are being addressed. We understand that very soon the full tax reform will be put before us. So what I want to hear, what we want to hear in this mid-year review budget, is that we are giving an update on how far they've gone in the tax reforms, as I indicated earlier on.
Clearly, it looks like you and GUTA agree on the fact that there's a need for tax reforms and there's a need for tax rationalization in order to create a more conducive environment for you as businesses. Well, thank you so much, Dr. Nyamike, for that. We also spoke to the CEO of the Chamber of Bulk Oil Distributors, Seaboard, Dr. Patrick Ofori. This is what he also had to say on their expectation for the energy sector.
Our key expectations are simple. we need a firm assurance from government that at least with the introduction of the 1 cedi on the petroleum, we're going to have some form of investment going into the downstream, especially the road network that connect the various depots and the discharge facilities in the country is in a deplorable state, which is a major accident for a major national emergency to happen. And we hope that we can have a firm commitment from government with the right kind of investment into a sector that contributes significantly to the tax regime that we currently have. We also expect that the government may come out clearly with a strong indication that the subsidy on premix and other dirty fuels are going to be free, so that we're not going to have a situation whereby premise that our.
So that was Dr. Patrick Ofori. He is the CEO of Seaboard. Maybe your final thoughts. It looks like for you as business community, it's a conducive environment, the issue of taxes and assurance from government that this cool economy that you're experiencing right now would stay same. That's it, right?
Exactly so. And we've also seen government prudent spending, government prudent spending, which is something we've been calling for all this while, that government should be prudent in their spending, and we've seen it. And one of the things they've also promised was that they're not going to crowd us out from the commercial banks. They're going to give space for us to go and borrow the money for businesses. Most time, when government is chasing the finance and you're also chasing it, obviously they will give it to the bank, Ghana government more than you, the business community. So once the assurance is there that we are leaving that space for the business community, I think it's a welcome news. So we pray that we'll continue in that line, yes.
Which is quite commendable considering the rate cuts and the rejection of bills that they actually have been doing on the T-bills market. Prof, before we leave, final submission from you before we go, a quick one, Prof. Prof. Korte?
Yes, I think my point about revenue and expenditure are quite critical. But then there's a ties in with the tax issue, the need for tax reforms. Because our VAT rate is far higher than what you find in the sub-region. In the sub-region, we find it in the range of 15% on average, whereas ours is around 22-23%, and sometimes there's a wide margin depending on who is paying and all that. So we need to rationalize it and draw some reforms.
Okay.
Government said it's engaging IMF, World Bank, but I think it's taking too long. We want to see the outcome as quickly as possible. Maybe in this media review, we'll be updated on this, and I want to see this happen.
All right. Thank you so much. That was Professor Peter Korte, economist and director of the Institute of Statistical, Social and Economic Research. Also in studio with me was Joseph Paddy. He's the director of communications for the Ghana Union of Traders Association. Earlier also we had Dr. Edward Akanyameke, president of the Ghana Hoteliers Association. Also we had Emmanuel Cherry. He is the CEO of the Ghana Chamber of Construction Industry. Thank you so much for your time. That'll be all for today's edition of Business Focus. For more business stories, please check our website, s3news.com/business. But before we go, every day people face different emergencies, police emergencies, fire emergency, medical emergencies, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you'd want to remember. That's *770#. Yes, *770# is a new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much, even without data. So there's no need to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank, proud sponsors of Business Focus as well as Telecel. Thank you so much for watching. I am Michael Obodu. We'll catch you same time next week. As always, please stay safe.